Hi, Steve Sosnick here with today's Interactive Brokers Midday Market Update for Monday, August 10th. It's an interesting day today. It's been an interesting week, especially if you live here in the Northeast. We just got our power back on Saturday night after a storm on, I think it was Tuesday. And a lot of my town still doesn't have it yet. So it's tough if you live in certain parts of the country, and I live in one of them. But as we recover from the storm, we see the markets, depending on which index you watch, recovering. The Dow is up. As I've said multiple times before, don't look at the Dow. It's not a great index by any way. I've pointed to the flaws in its construction, and so if you have a few stocks moving higher, as you do today, such as the banks outperforming, and other stocks that are in the Dow outperforming, you get a rally. You have Boeing up, you have Caterpillar up, you have stocks like that moving higher, and so up goes the Dow. For those of us who prefer to watch the broader indices, which are a bit more cap weighted, which represent the better swath of the American economy, those are not doing as well. Nasdaq in particular is, at least as we tape this, the Nasdaq has been pretty much lower all day. S&P made an attempt at opening higher and then failed. We'll see where that ends up. We'll see if we get the late day rally that we've pretty much had every day. We seem to go down, open, try to rally. Some of the days we continue to rally. Some of the days we fail a little bit. Sometime later in the day, when we retest the lows, that's like become almost a buying signal. It is not necessarily a buying signal, but I could see why people would take it as one, because it does tend to rally off the lows of the morning sometime in the afternoon, and then we seem to close higher most days. That is not an etched in stone pattern. I don't advocate necessarily trading off it. You better do your own work if you're gonna trade off that pattern. But as someone who's attuned to watching patterns of the market, that in a very broad sense, if not necessarily a very tradable sense, is what I'm seeing. And today was kind of a curious day. It was, what did the market see over the weekend that would cause it to continue to rally higher? I think that the executive orders coming out of the White House are going to prove to be more of a distraction than actually an advance in the fiscal talks. The Senate more or less appears to be MIA, which is a very strange situation to have the House negotiating with the White House, but the House of Representatives negotiating with the White House, with the Senate nowhere to be found. But I think that their caucus is so divided and quite frankly fearful of losing its majority right now that they're preferring to keep a background role rather than reveal their internal divisions. Regardless, none of that is really good for the market, and I didn't really understand why that was getting the market to rally, but the market is in an upward pattern, and so be it. The more interesting thing to me is that we're seeing some declines in the real leadership that had led the market higher, which is why you're seeing NASDAQ lower today. Most of the big NASDAQ mega caps are seeing some profit taking. That is not a bad thing. Taking the profits is certainly not a bad thing. And as we see the S&P sort of flirt with its all-time highs that were reached in February, one might expect to see a little bit of resistance at those levels. As of now, we really haven't tested it in a meaningful way, but one would think that the market could run into some trouble there as people just sort of take that as a mental signal. Maybe we lighten up. But right now, the momentum seems to be much higher. I would keep an eye on this divergence between the NASDAQ and the NASDAQ big caps and the broader market, or some might say the growth versus value trade, where we're seeing value stocks outperforming growth stocks being, again, overrepresented by those NASDAQ mega caps. And at one level, rotation is healthy. I think it's not a bad thing to see some profit taking in some stocks that have been tremendous winners, and people starting to broaden out and look for stocks that have been a little bit left behind by this. As again, I'm seeing some improvement in the bank stocks today, and some broader industrials, and that isn't a bad thing. But I do have to wonder whether, if this profit taking in the NASDAQ stocks becomes more sustained, it has no choice but to weigh on the S&P 500. And what's very interesting to me is we're starting to see some real divergence now between the VIX and the VIXN. VIX, as many of you know, is the SIBO volatility index. commonly called the fear gauge. I'm not going to go into it now why that's a very imperfect moniker, but it broadly represents fear in the marketplace, but it doesn't. It's a mathematical construct, which is related to the level of anxiety in the market, but also related to the amount of movement in the market. And we've been sort of steady, and it's not necessarily unfairly priced, but we're seeing VIXN, which is the NASDAQ 100 equivalent, same calculation but using NASDAQ 100 as its base. We're seeing that trading at a fairly large premium now, about 40 or 50% higher than we're looking at it. Sorry, I'm going to stare at my screen a little bit here. So right now VIXN is about 31 and VIX is about 22. So that's a fairly significant premium. Now, VIXN has for most of its life has traded above VIX. It's actually been very unusual when it doesn't. But I think that this is an interesting tell here, that perhaps the market is starting to look for some profit taking or a little bit of fear coming in as we get into some seasonally challenging times. We are starting to see a little bit of fear creep into the mega cap NASDAQ names. The reason for my concern there is not a little bit of garden variety profit taking, but because these stocks are up so sharply and because there's so much invested in them. Remember, right now, we're talking trillions of dollars in market cap. It's not all that different than the Fed's balance sheet when you take the biggest NASDAQ stocks and add up their market caps. So if there's real significant profit taking in those names or a little bit of fear coming into those names, that could be a warning sign for the market. I don't think we're there yet, although the VIXN versus VIX is starting to signal that some people are starting to hedge their bets in a more meaningful way. We'll stay tuned on that one. Otherwise, have yourself a great day. Bye-bye.